Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday, the 7th of August. Starting off with a hot one, at least one which is moving rather well at the moment. Capex opened at the low, it's currently on the high of the day, which is pretty impressive. So a nice juicy green candle there, breaking through the resistance line there from May at 2.92. Also, that's the level of the 50-day line, and we're also now above the 200-day moving average at 3.04. End of day, end of week close above the 200-day line could take the shares pretty swiftly onto the top of the rising March trend channel at just over 4 pence as soon as the end of the month. At this stage, probably wouldn't even expect the shares to go back below the 20-day line, currently at 2.8, so that might be a tight stop loss for some. Gold stocks obviously rather in favour at the moment, perhaps not actually rallying as much as you might expect, given how much the commodity is rocketing, but presumably that will be sorted out over the near term. Here we've got Conroy Gold, and we've had second gap higher this week after the gap we saw in July, so pretty strong rampant price action. What I call a V-shaped bull flag as well, and all we're looking for here now is really an end-of-day close above that old February resistance line at 25 pence. Above that, we could head up to the top, well, head up to that resistance line there from the end of last year, heading up towards the 55 pence level. If you're cautious on the stock, maybe wait for an end-of-day close above the July peak at 28 pence, but at the moment it looks as though the shares have done enough to keep on going. Stop loss at this stage, probably 20 pence or just under, near the 20-day moving average there, shown in purple. Stock which just starting to move now after being in a rather quiet period is Dukemount Capital. Here we've got the shares just breaking the resistance line there from May and the 50-day moving average at 0.7 pence, or just below that. End of day, end of week close above the 50-day line, and even better if it was above the 200-day line at 0.71. You could see the shares go on a journey over the next month or so up towards the top of that rising trend channel from October at 1.4 pence plus. Stop loss can be from, I suppose, 0.6 down to 0.55 at the maximum, but arguably one would expect the shares just to keep pushing towards the 0.8 area now, rather than having to retest again, given how much testing has been going on over the past month or two. Immotion is next. Covered this a while back, but it's a nice looking chart, not too volatile. Situation here is we've broken that post-May resistance at 3 pence. While we're above that, looking for a top broadening triangle from March up to 6.5 pence. Perhaps as soon as the end of this month or going into the first half of September. Katoro is the next contender, where I believe Kibo has a stake. Correct me if I'm wrong, but anyway, the chart on its own seems to be looking rather healthy at the moment, if it actually updates. Here you'll be able to see we have near-term resistance for the shares coming in at 2.5 pence, so we're looking for an end-of-day, end-of-week close above that level to open up the prospect of a pretty decent move. That February resistance line projection heading towards 5.5 pence, and the upside very much valid while we hold above the 50-day moving average at 2 pence. You could possibly have the stop loss a bit tighter than that, maybe 2.2, but at least while we're above the 50-day line as a trailing stop loss, looking pretty healthy. Next up is a stock which has not been easy over the recent past, Mosman Oil and Gas. Here we just made quite good progress since the beginning of last month, just nudging the 200-day moving average and recent resistance at 0.15 pence, looking for an end-of-day or end-of-week close above 0.15 to open up the possibility of a move towards the top of the March trend channel at 0.3 pence plus. Stock I was looking at yesterday, which is rather disappointing in terms of having missed it, but you can see that there was a consolidation triangle, which was actually a continuation triangle on the stock, just waiting for that to break the 10 pence level, which obviously it did rather sharply today, hitting 23 pence. Probably what's going to be key now for the rest of the session and over the next few days is whether the shares can hold above 12.9 pence, which is effectively neckline resistance on the consolidation that we had. So hopefully old resistance becomes new support. We can do that, then looking for a retest of 20 plus, maybe next week or the week after. Stop loss at this stage really back below 10 pence is probably the best that one can say. On to Midatech, where if you check the RNSs, Goldman Sachs has managed to acquire 3% of the company, which is quite interesting given the way that it's only a market cap of £20 million, and so it's obviously normally below the radar in terms of the larger investment houses. But we have the near-term moving averages rising here, the 50, 30 and 20-day lines all rising. While we're above the 20-day line at 33 pence, looking for at least the 200-day moving average at 43 pence, and obviously after that we can dream of the top of that falling trend channel from February up to 65 pence. Stop loss back below 30 at this stage. On to NSF, which I know has a lot of fans willing it higher. What's interesting at the moment, after that rather very disappointing gap down that the shares served up at the beginning of the month, is the way we've got some bullish divergence in the RSI window. So we had a lower low for July, but we've got a higher RSI trace for August, which might provide some decent momentum over the near term. That the bottom of that gap, 4.3 pence. So if you're not in it, you would probably be looking for an end of day close above that as a buy trigger, and after that, obviously, then we could be focusing on the 20 and 30-day moving averages around 5 pence, and then after that, the 50-day line at 7.8 pence. But really worth waiting for 4.3 pence to be broken before getting too excited just at this stage. Stock which looks pretty well set up, although it hasn't moved that much yet, is Riverfort Global. We've had the stock rising within a trend channel from March, through the channel roughly around the 0.8 pence level with the 50-day moving average. Probably just want to see an end of day close or a weekly close above that June resistance line. Say it's around the 0.85 pence level, so end of day close 0.5 or above could then open up the possibility of a move to the top of the channel as high as 1.2 pence. Obviously a slow mover, not that liquid, but the setup is there nevertheless, with all the 50-day moving average now starting to, or continuing to rise quite well. Reach for is the next stock in the selection, a rather large selection again. Here you can see that had a bear trap gap reversal, which is a pretty good setup there. Bear trap below 0.2 pence, while we're above, I suppose, the 20-day moving average at 0.24, and also the top of that gap. Looking for further moves to the upside. Initial target clearly that 0.47 level, which is the June peak, but big picture target which could be achieved given the fact that we've had this nasty bear trap up to as high as 0.9 pence over the next 1 to 2 months. So something to keep an eye out for. End of day close and a weekly close above 0.26, which is the 50-day line, or 0.28 rather, would be a decent trigger for technicians. As well as NSF, I suppose the other stock that you see people willing higher is Supply at Me. I think the secret here was not to jump the gun, which clearly some people have done from 0.3 pence and down, but wanted to just to revisit this now that the shares have nominally broken out of this falling wedge, breaking it at, I suppose, 0.06 pence. So that is a positive breakout there. We've got reasonable bullish divergence as well in the RSI window, so that should provide some help to the cause of the bulls. But at this stage, above 0.06, best case scenario target at the moment up to 0.11. But obviously this is a stock which rather divides the market, so some people are perhaps not keen on the bull argument there, whatever the setup is on the chart. Stock which is almost as volatile as Mobilityone is the next one, which is coming through in a minute, which is certainly has given investors a somewhat rocky ride over the last few weeks. But we've got Sealand Capital hopefully coming up on the chart in a second. Here you can see that the shares have broken the line of resistance there from July around the 20-day moving average at 1.6 pence and rather 1.56 pence. Above that, we had the initial target hit today at 2.3, but looking for an end-of-day close above 2.3 to retest for the shares, then to retest 4 pence. So 1.6 currently support, 2.3, and then 4 pence possible for Sealand Capital. Final stock of the day is probably one of the market favourites at the moment. Had a decent bounce as well. Tiziana Life Sciences, and here it's interesting that you could almost guess where the shares would go down to. The old resistance there, £2.10, and so then you have the round number of £2, and so obviously the low yesterday was 190, just to stop out as many people as possible. Current situation is that at least while we're above 190, looking for a retest of the top of that trend channel from back in March at £2.80. Obviously, that retests the spike that we had at the end of last month. If you're cautious on the shares, maybe just wait for an end-of-day close through 225, as that was resistance on the way down. 226, in fact, that was resistance on the way down. So that is Tiziana Life Sciences, and that is the end of the week. See you again on Monday.